Hey, what's up, ladies and gentlemen? It is Tuesday, August 5th, 3:05 p.m. Hawaiian Standard Time in the great year of 2025. As you can see right here, we were filled on the 38 strike price put for FCX. It shows right here one contract. The negative means sold. 10 days left expiration. We got filled at 35 cents. Right now, the current bid and ask is 27 and 23. Mark is 25 between those two. Last price it traded for was 24. The high of the day was 35. The low was 24. We got lucky and sold it at the high. So now it's just a matter of waiting. And as you can see here, there's a almost 20% chance that it will expire in the money. So that one a little bit higher than this order. It's a sell order. Attempting to sell the 37 put a little bit lower for how much? We're asking for 14 cents on that one. If that gets filled, that'd be two short puts. And then this one is a call, short call. And that would be at the 44 strike price. You can see the short call would have at the moment factoring in almost 6% chance of expiring in the money, and the 37 put almost 11% chance of expiring in the money. Now the 38 and the 37 are a little bit easier to deal with if you have cash on hand, because if you have enough cash to buy 200 shares, you could just let these go to expiration and not worry about what happens afterwards. However, in this account, we do see that we in this simulated account, we see that theoretically this account would have enough money to do it. But you on the okay, you see here long stock, we don't have anything. Just wanted to be clear on that because this account does not own 100 shares of FCX. So really what I've done here is I've sold a naked call option. However, this account does have enough cash, and this does take more monitoring because what I could do, in theory, is if FCX starts moving up and starting to get close to this 44 call, I could use my cash to purchase 100 shares to turn that naked call into a covered call. When exactly would we do that? Might be dictated a little bit by how much cash you have. For example, if you had enough cash to purchase 300 shares, but that in the 100 here at 37, 100 at 38, and let's say the next 100 had to be at 40, like you had $4,000 left. That means you'd have to do it at 40. Then that's what you're going to have to do. That's what you have to watch out for. If you have, let's say, instead of extra $4,000, let's say you have 20,000. So the price really isn't an issue. Then maybe you look at the charts. That's what I would do. I would look at the charts and look for some a support resistance area, obviously a minimum of a resistance area, and find some number that's within my budget that I'm going to purchase 100 shares of this if it keeps trading above this number. I'll do that some other time on a chart just to keep this video short. But that would be something. So if you have a paper trade account, set this up. With a paper trade, you're not actually the only thing you're risking is doing nothing. That's the risk with a paper trade account. When you do nothing, you're risking your goals. You're risking learning. Your goals come from the learning. Your goals come from knowing what buttons to press, how to take this number minus this number to figure out some statistical thing, how to set things up. And then once you know like how to run the software, then when you move into real life scenarios using real money, then you only have the stress of the real money. Because if you try to learn how to navigate Thinkorswim while using real money, now you have two stresses. You have the stress of real money, and you have the stress of not knowing which flipping button to press out of all these different buttons. And you're trying to do it like in the spur of the moment. So take advantage of the paper trading, and we're going to wrap this up. We'll see what happens tomorrow. So this is a day two, but there'll be I will do my best to make one video a day to monitor what's going on with this position over the next 10-ish days. And we'll have a document of a full cycle of option selling from the very first strike price open to expiration date. With hindsight, I wish I would have chosen like 5 days to expiration to make it a little easier. So, anyways, look forward to talking to you whenever I talk to you next. Aloha.